Welcome everybody to a snowy afternoon. It is 12/12/24. Kind of a cool date. Scott Riley, the market update desk. We've got producer price index inflation data that came out today, along with unemployment claims. Let's break this down. Yesterday we had consumer price index. Now we get the wholesale side, producer price. And what did we find? We found we had eggflation. Let's talk about this. So in total, the headline producer price index rose 0.4%, which was hotter than the estimates of 0.2. And year over year, we rose from 2.6 to 3%, which was hotter than the market expected at 2.6%. Now, the previous year over year reading was revised higher also because last month's was revised higher by 0.2%. The core rate, which strips out the volatile food and energy, rose 0.2%, which was in line with estimates, but the year over year took a jump. Now, once again, this was due to upward revisions from the previous report and took us from 3.1 to 3.4%. Now, the core rate the market had estimated, planned on, was 3.2%. Now, a big surprise within that report was the rise in fruits, vegetables, and eggs. In fact, 55% of the total rise was within those two categories, fruits and vegetables and eggs. This means the spike in those areas was tremendous, so it was definitely unexpected. Now, if not for these items, the estimates would have been exactly in line. One interesting thing to follow is the Fed's favorite measure of inflation, which is PCE, which comes out on December 20th. Some of the data points within PPI do flow into the PCE report, so we're kind of watching it really close on what that's going to be. The bottom line, wholesale numbers jumped and it pressured bonds slightly. Not as much as what we would have thought, because we had something else come in today, which was jobless claims. Initial jobless claims came in, rose 17,000 to 242,000, which was significantly more than what the street had estimated at 220,000. And going above this 240 mark is kind of an important line of demarcation for what the market looks like. Now, we'll have to see, is this an anomaly or is this a pattern that is establishing within the workforce? Continuing claims. Now that also went up. That rose by 15,000 to 1.886 million. Now that figure remains the highest since 2001, showing that the job market may not be as strong as what the market is, especially stock market and the media is implying. Now, next week we got a whole lot going on. We've got the Fed's decision next week, and then that's going to lead up to the PCE report. Then we get some short weeks coming up with Christmas and New Year's. So we're going to see some volatility. It's just, will that volatility be contained within resistance points for the bond market and mortgage-backed securities? We're seeing a little bit of pressure to the upside today of 10-year bond, and we're being pushed lower on mortgage-backed securities, resulting in a little bit less favorable conditions for mortgage rates. We'll stay on top of this. Give us a call. We're happy to help get you pre-approved, get you connected to some of our stellar agent network connections that we have out there. If you don't have an agent, we're happy to connect you. One of the ones we trust out there that we have worked with for a long time. Give us a call, 616-293-2189. Have a safe afternoon.